Hi everyone. The past few days have been a roller coaster for Canadian businesses. One day we are bracing for impact. Well, the next we are told that we still have 30 more days. But whether these tariffs stay, change or disappear, one thing is certain, Canadian businesses are too dependent on the US market. Hi, I am Aman, a Canadian CPA who helps business owners manage cash flow and tax challenges. I work with businesses like yours every day, and I know these tariffs are creating real concerns. Let's go over practical strategies to help you stay ahead. Number one, adjust pricing. Can you pass costs to US customers? You see, a 25% tariff means a 25% margin hit, something most businesses cannot afford. Some businesses may be able to pass on the price increases to the customers, but only if their market allows it. Others will need to absorb part of the cost and find savings elsewhere. Well, before deciding, review your customer contracts immediately. Check if your agreements allow for price increasing. Is there flexibility for annual adjustments or cost pass-through clauses? Look for any mention of taxes, customs, and duties. Can you legally pass this cost directly to customers? If contracts have fixed pricing, reach out to your customers, see if they are open to renegotiation based on cost pressures. Another tactic is that instead of applying an across-the-board price hike, consider listing tariffs separately on invoices like a fuel surcharge. This keeps base prices stable while passing costs directly to the importer. And in case the tariffs change, the surcharge can be adjusted accordingly. The second strategy is to review contract and payment terms. Now let's talk about contract structure. If you ship delivered duty paid, which is also called DDP, you pay the tariffs, switch to free on board, so US buyers cover it. Use shorter contracts to stay flexible in case tariffs change again. If your contract allows, pass through tariffs at an agreed charge instead of increasing product prices. One contract change could save you thousands of dollars. If you haven't reviewed your agreements yet, please do it now. Adjust your supply chain. You see, if prices increase aren't an option, look at your supply chain. Toll manufacturing is a tactic. Instead of shipping finished goods, send raw materials across the border and have them assembled in US to reduce tariff exposure. Shift final assembly to the US if that helps you lower your tariff rates. You can also time shipments strategically. Staggering deliveries could help manage tariff risk. Let's take an example. Let's say a furniture company shipping pre-cut wood instead of fully assembled tables may pay lower tariffs. The fourth strategy is tax and transfer pricing. Tax strategies can also help reduce tariff costs. Sell to a US subsidiary at a lower price to reduce the tariffable value. Unbundle pricing. Separate things like software, licensing, or R&D costs so that it can lower the taxable value of each of these exported goods. Seek an advance ruling from US Customs to confirm eligibility for tariff mitigation strategies. These aren't just for big corporations. Small and mid-sized businesses can also benefit if they are taken into action properly. See, this is the wake-up call, and Canada needs to diversify. We've been through this before. Whenever US trade policies shift, Canadian businesses are left scrambling. So, whether these tariffs actually take effect or not, Now is the right time to ask, how exposed is your business to US trade policy? Can you start building relationships in other markets? Are there ways to strengthen your domestic customer base? You see, I know expanding beyond the US won't happen overnight, but businesses can think of how to start diversifying now, which will be a much stronger position next time this happens. What you need to do now, review your pricing. Can you pass cost to US buyers? Check your contracts. Are you covering tariffs when you don't have to? Optimize your supply chain. Are there smarter ways to ship? And then use tax strategies. Are you reducing tariff exposure using tax strategies? Consider listing tariffs separately. Can you itemize them like a fuel surcharge? You see, you need to take action now. If you have not talked to your chartered professional accountant about these tariffs and your cash flow strategy, now is the right time. Like and subscribe for more business, tax, and cash flow insights. Drop your questions in the comment below. Until next time, bye.